tell us your name, why you here in San Quentin, and where you from?
So my name is Curtis Carroll, but everyone calls me Wall Street. I've been in San Quentin 4 years now, and I'm here for the crime of robbery, murder, attempted murder. Actually happened in Oakland, and I was sentenced to 54 years to life in prison at the age of 17 years old. And I've currently been in prison 20 years.
You know, I always heard people say education is key, and you know, through education you can see the world. I think you're a living example of that, you know, and experience evolution. It was money that brought you to literacy, right?
It was.
And this is what it was, that literacy that's made you a celebrity.
Well, I did.
From what you did with what you learned.
Right.
You know, and how did you first begin to understand finance?
So the interesting thing is that, and I was sharing with someone over there, is that even to this day, I don't know sounds. So I don't know vowels and things like that. Everything I do is by memory. And so it's one of those things like the sixth sense. Person go blind, they hear better. Person is deaf, they see better. So I memorize a lot faster than, you know, probably a lot of different people. And I never knew that I had the skill to memorize. So when I was trying to teach myself how to read, I would take phrases and terms and I would trick people into telling me what words were. I would memorize the words and I put them on a word list. And whenever I would read stuff, I would try to find these words inside the articles that I read to try to make phrases and things out of them to put stories together. And so how people look at soap operas is how I look at finance. I try to find the storylines, who people are, what people are doing, and I learned to use a lot of the sentiment about people's emotional connections to things, which kind of taught myself. And then, you know, I just kind of got this thing where I always thought that everybody knew about money. I just thought I was the only one who didn't know. I was like, how can I not know about this stuff? And you know, I guess I started researching years later and realized that, wow, most people didn't know about what was going on. And so that kind of drove me to move in a class of my own, which I guess the hard part is about being in prison, talking about finance, is that you're the only one talking about it. The prison system is against it. The other prisoners are against it. You're a con man. You talking fast talk too? Right, so already I get the fast talking thing. So you trying to con us, you trying to hustle. So I was always fighting, man, this uphill battle, trying to tell people, man, we can make money in the stock market. Man, we don't talk about no damn stock market. Get this weed, get this drugs.
So, in prison.
In prison. So yeah. Not only is you talking about it in prison, but you talking about finance and you black. So first off, black people don't know nothing about that. Right? So you shouldn't even be talking about that. And you're an inmate, so you really shouldn't be talking about that. So it was always this uphill battle, man, that I told myself, well, forget it. If I'm gonna be ridiculed, then I'm gonna be ridiculed for something that I want to do for a change in my life. And it's gonna be my way to be ridiculed, to do what I want to do, as opposed to what everybody else wanted me to do.
What was that definitive moment that you showed by example that you knew what you were talking about? What was that first stock that you saw a positive result?
It was this company that I bought called Acamo Technology, something like that. There was this highflying.com company during the financial crash. I think their CEO died in the World Trade Center and the company had went go. And I was basically trying to figure out what to buy. And so my whole idea was that people were selling and buying based on how they felt as opposed to what the information was. And so I kind of took that approach. Stock prices were like 50 cents or something like that. I go in, I buy, the stock price went to like $2. That was like one of my first trades. And I thought, oh, okay, wow, this is cool. I didn't realize I didn't know a lot of what I thought I did, because you know, you make some money, you know, you think you got all that, you think you got all the answers. And that was like that really moment that I thought, like, I could do this. Obviously, I didn't think it would be like today, but I thought I can do it. And so I figured if I can do it, I didn't have to do the other thing. The difference was that, was I willing to do it facing all the ridicule that would come from pursuing this endeavor now? Because that's what was coming. Obviously, I didn't think it would be as much as ridicule as it was, but
nobody believed you knew what you were talking about, right?
No one, and even still today, right? You know, people, by right, I get it. You know, You got to prove it.
I see you I feel like you brought me a tip book, like that I could take home with me. I played a few, I played a few stocks.
Hey, so
that first stock you invested in was a penny stock, right?
Matter of fact, that's in here too. That's it. So it's crazy. So the thing about this, man, is that
let me see how you did your book.
This is all handwritten. Well, it's on computer now. Before I had computers, I had to write. So this is what's known as the column check system.
Okay.
And I developed my own system. It's fairly simple. It's just a row of columns. It's a stock price at the top. Mm-hmm. This one is Microsoft. Mm-hmm. That's the ticker symbol.
Okay.
MSFT. And here are dates. And so it's every day. If you notice, they're by months.
Yes.
January, February, March. And so it's every day, every 28th or 27th of each month, mm-hmm. and it's the stock prices and the time. So you can't see the data here, but there's data entries in here. Uh-huh. And the data entries that's in those columns is the stories that happen on that particular day.
Wow. And you put that, and you document all of that.
Right, what is in my head.
Okay.
So what I didn't bring down here today, which I'll probably show Chris and Beverly this later, in my cell, I could probably have maybe 10,000 articles. Mm-hmm. They're in pockets. And these articles are my computers. And so whenever I need to recall information, I go into this archive that I got, and I got Microsoft, and I got a company, and I got a whole bunch of articles about Microsoft going back 10 years. And I can go in and recall this information, and this is how I know when to go in and buy and sell these stock prices.
Wow.
So let's say, for an example, the financial crisis hit, right?
Yeah.
I followed at that time, I followed a lot of the banks. So in this, if you look at each column and row, it shows all the company stock prices fell or rose at the very same time. And that's how I know when I'm buying, because all the industry is doing good. And so what I do to follow a lot of the foreign companies inside this book, so this part right here, you see, these are the different industries.
Okay, so we got semiconductor,
hardware and equipment, internet. And so under them is all the internet companies. Telecom. And so I have Google. Google. So this is IPO. That's the day that Google went public.
Yeah, I remember that.
So August 19, 2004, I have every stock price entry from that day in a book.
Wow.
Not this book. This the penny stock book. This is the rally stock book, and I got one that's a roller stock. Okay. And so I got entries from every company in there, and that's how I follow the data. At this time, I kind of got a lot of the times and dates memorized, so it's easy for me to kind of recall if I'm investing or something like that. I can just kind of take the thing.
So you giving me this is like the holy grail, but I can't read it without your help.
That's right.
Okay.
That's right.
So you're protecting the formula.
I'm protecting the formula, but what I do is I teach the students how to use this coupled with sentiment. Okay. So I tend to think that the markets move 60 to 70, I could say 80, 70, 80% on sentiment than it does factual information. So most of it is just based on all speculation. So what I'm trying to teach them to do is how to use speculation to make money, which is the same as the industry standard, but a little bit different, because if you move a lot on speculation, then that means that you don't have this long-term horizon, right? I call it peaks and valleys. So the industry standard is peaks and valleys. We move as the markets go like this. So you got your 401k, you got your retirement job, right? And this is what happens. Your retirement goes high up like this, it gets to the top, and it goes down. And so what most people do, because they're ignorant, is they do this. They let it go up. And just like everything, you have what you call a peak price. That means that when something is overvalued, what do? You get rid of it. So if you buy your car and you've been driving your car down the road for all these different times, how do you know you need oil change?
Car start conking out.
So car start conking out, you know you get oil change. Stock price is rising. It hits here, there's nowhere else to go. Yeah. So what do? You do nothing. You watch it go all the way back down again. And for 20 years, you do this. So technically, you can't never retire because you've never taken any money off the top. How the standards are supposed to be is when it gets here, just like your car need a car change, you take the money off the table, the prices go back down, and what do they do again? You buy at the bottom. Yeah. So when you go put the oil back into the car and refill it again, it goes back up to the top, it clunks out again, and you do the same thing. That's how your retirement's supposed to work. Yeah. But the big boys don't tell you that because they need you to keep the money inside because they're charging you fees to manage it for you. If you keep taking the money out, they don't get the fees. So the standard is different. So I'm saying that you don't need to play that standard. This standard is a little more better to play.
Now, to people who are listening to this, who think that stock market investing is no different than going to the casino and gambling, or rolling dice, with their friends. Explain to them what exactly the difference is.
So let me say this. So first off, and it's crazy you say that, because everybody, especially black people and minorities, right? They believe that it's all about gambling and it's about risk taking. So, I always like to say risk is relative, right? Risk, the word risk, as they say it, people try to make it appear as if this risky, that's risky. Risk is based on a person's tolerance for that, not based on what the word itself says, right? Well, one person thinks it's risky, someone else does not think so, so risk doesn't mean that. And so I'll say this. Everything that we do in life is about a management and a system in which we provide it. So, I say this in my book because I got this book coming out soon called Strategies of a Street Trader. And in this book, I talk about the different strategies that I have created and the strategies that I've used and just this idea of overall finance. So one of the things I talk about in the book is I say that a card counter, when they go, card counting in Vegas is illegal because for us in the casinos. And a card counter goes into Vegas, they sit down at the blackjack table or whatever have you, and they go and they sit there and they watch the deck. And basically what they're doing is they're trying to catch the deck. When they catch the deck, they place the bet down and then they play the hand, right? And they play. When they lose the count, they stop playing. And the reason they stop playing is because if they play without having the deck, they're gambling. They're gambling because the percentage of losing money is very high if you count out the deck. The stock market and investing is the very same way. It's a system. It's the system that you create that fits your personal need. Investing is not about trying to be like the hedge fund guys or all this other kind of stuff. It's about creating the system that fits the need for what you want to do. So if you're saying, I just want to be a person that live comfortable, they got stocks for that. If you're saying, I want to be a person who want to move into these real fast investments, they got investments for that. So the stock market has every type of investment that a person can want. But because they see it as so volatile and don't understand that it's crafted that way, they stay away from it. And so I try to tell people that no matter what you do in this world, especially in the United States of America, most of what you do if you work in a job, you will be tied to the stock market. Your 401ks is tied to the stock market. Your pensions are tied to the stock market. Everything that you do, for the most part, is tied to the stock market. So when people say, well, I don't want to mess with the stock market, well, what the hell you think your 401k is in then? So if you already going to be attached to the stock market, why not learn how to use it to fit your personal need? Crafting a portfolio for people individually, right? But giving them an overall view of how the markets work is my job, so I can dispel all those rumors that people have about it being gambling and, the little man can't play. That's bullshit. Hell, the market is built on the backs of little people. When they take company public, the little people is the one buying all the shares. Bill Gates don't own Microsoft. Microsoft is owned by the people. So who are the people in charge? Really? Is it the people who know that they don't own the company? Or is it the person who owns the company and don't know that he do? So the little guy is the guy that has the most power because it's more of them than it is the one person at top. But most people don't understand that. And so I just try to educate people about the ideas of what the market is as a whole, how the system works, and how the role that you play in the system can benefit what you want to do for you. You always say that, you got all these athletes and you got these cats. And these guys, if they played the markets, kind of like what you're doing, if they played the markets, the ownership that black people and minorities have in self-containment and businesses and things like that would be massive, If you sign $100 million contract playing basketball, and you put $5 million into Apple every year, their returns are huge. Apple is the biggest company the world's ever seen right now, right? The dividend payments alone has it where you live, and I'm sure you have stocks that have dividends, so you know very well how lucrative That is, just to sit on the money and be able to live off checks that come in, which is basically like interest in the bank that you get. So,
Right.
you know, I've spent my life currently as I have since I've been doing markets to dispel these myths, man, to empower folks to understand that you should not have a portfolio that does not have attachments to the stock market. You cannot retire successfully if you don't have access to the stock market. It's impossible in this country. You just can't do it because everything is tied to now. You can get some real estate, you can get some other stuff, you can do a couple other things, no doubt. But if the stock market goes, so goes everything else. And that's the sentiment. And I also teach a lot about sentiment. And so I just want to say this, if I may, that my philosophy that I teach is called FEEL. FEEL. Financial Empowerment Emotional Literacy. The creation of this was to do exactly what you just asked me about, how to get people to understand. When people talk about the markets being risked as they do, that's an emotional response to what they see. That's not anything based on facts. Because if you played in it, then you would make such a statement because you know that wasn't true. Because you would have the understanding of that. And so when I created this philosophy, it was to teach people how to separate the emotional appetite from their financial appetite, and the things that they do, how to identify the emotional triggers that causes them to spend money or cause them to see things the way they see it. To help kind of get rid of some of those myths so people can play and participate rather in a more successful and safer environment that they currently see themselves playing in and think that it's not. So I just wanted to say that.
And the way I like to illustrate it to people, you know, when they say, you know, I can't afford stocks, you know, I can't get into it, is I tell them that for the same price as a pair of new Air Jordans, you can buy 4 shares of Nike. And unlike the Air Jordans that after you wear them, they start to become worthless, the Nike shares over time will actually make more money for you and give you dividends.
That's right. And, you know, I discovered that it was like the greatest thing that man could have ever invented that would allow a person from the hood, right, or the average Joe to own a piece of the greatest brands that the world has ever seen, and it's legal. And it's legal, and I can use the same skill sets, right, the same management style that I use in my illegal business, I can use now in his legal business. And that's kind of like how I've seen it.
Right. And, you know, for example, I invest very heavily in stocks. Most of the money that I make for my company ends up getting invested in the stock market. And this is actually how I built a lot of my wealth. And Warren Buffett, when I first started, I read Warren Buffett's book, The Snowball. And then I read the book that he learned from, which was The Intelligent Investor by Benjamin Graham.
I read that one too. Right, by Benjamin Graham.
Now, I think coming from me, a lot of people don't quite make the connection, you know, because, you know, I'm white, I'm a little bit older and so forth. But explain to the people how Warren Buffett changed your life.
So Warren Buffett was this really, and is today, is this really laid back, really simple concept kind of guy, right? And this is how I always have seen him. So when I would read about him and the things that he did, he never really talked over my head to me. And the things that he did, I felt like he was talking to me by saying, like, you didn't need to have a huge IQ, you know, you didn't need to know a whole bunch about math, like you didn't need to have any kind of special skill sets. What you needed to do was have fundamental understanding. And when he was saying those things, right, it resonated with me so much because coming from the hood, you know, coming from, you know, broken family, torn home, you know, just like millions of people today, my mother being a drug addict and grandparents and my close-knit family and all this kind of stuff, I felt like when he was saying those things, he was saying that even in your conditions, you still can play the same game that I'm playing, right? The conditions that you're in doesn't matter. That doesn't matter to you, and that's how I seen that. And it resonated with me so much to where he became my Michael Jordan. He became, you know, my Michael Jackson. So he was the one that motivated me the most because he was the top, right? It wasn't nothing, as far as investment go, as far as I'm concerned, there's nothing bigger than Warren Buffett. And because his strategies and philosophy, I always seen as being so simplified, right? Especially for a person like myself to understand and grasp, I feel like anybody can understand that.